I think
So got Adrian and Aiden here from Everyday Accountants that we're working with at Create PT to provide advisory accounting services to our learners and to anyone else that is interested. Obviously, we had the budget this week on Wednesday. Rishi announced a few changes. So these guys are going to go over how that impacts people working in the fitness sector.
Yeah.
Over to you.
Thank you, Adam.
Let me try and
have a presentation to share. So we'll just share our screen now and we can run through the slides.
Is that showing for you guys?
Yes.
Awesome. Right, okay. So basically what the announcements were, or what were included previously, which we're going to cover in today, is going to be the income tax rates and thresholds, national insurance rates and thresholds, national minimum wage, self-employed basis period reform, which is not coming in straight away, but it will be in a couple of years, which is definitely worth talking about. And then finally, business rates. Would you want to start off, Adrian?
Yeah, sure. So on the income tax rates and thresholds, the personal allowance and the higher rate of tax has remained or has said to be frozen. So it will continue with its existing limits, which is probably a welcomed announcement because everyone first feared potential tax increases in the personal taxation because of all of the support the government has given through the pandemic. The fact that the personal allowance remains at 12,570 and you don't pay high rate of tax until your earnings exceed 50,270 does is still a reasonable threshold for personal trainers to earn a reasonable amount of money and not pay too much tax at higher rates. The basic rate bands are 20% for self-employment and higher rate is 40%. And then in addition, if you have a limited company, you would extract profits out of the company by dividends, and the tax rates for dividends have increased by 1.25%. But if you are at the basic rate of income, i.e. under £50,000, that increase has gone up from 7.5% to 8.75%. So it's still a very reasonable threshold.
Yeah, definitely.
Yeah. Moving on, we've got the national insurance rates and thresholds, and there's a little bit more information to this because there is a couple of changes. So you've got the primary threshold and the lower profits limit threshold, both increasing in line with inflation. So they both increased from 9,568 to 9,880, and that effectively is the amount of money that you earn prior to paying national insurance. Once you hit that landmark of or milestone of 9,880, you'll then start paying national insurance on both your earnings from employment and or self-employment. The small profits threshold is relevant to those that are self-employed, and that's been increased as well in line with inflation. So from 6,515 to 6,725, and that is basically when you start or when you have to pay class 2 on your self-employed income. And then in line with the tax limits, the upper earnings limit and the upper profits limit have both been frozen in line with a higher rate threshold at 5,270. So that is pretty much the changes in terms of the thresholds. And then similar to what the dividend tax, the 1.25% increase, you've also got that on class 1 and IC, which is basically relevant to employees and employers, and then you've got class 4 increase, which is relevant to the self-employed people. Sorry. And then same with the class 1 and class 4. Once you hit that upper earnings limit or the upper profits limit, that 2% has increased to 3.25%. So 1.25% increase across the board on NIC and dividend income tax, as well as small profit, small threshold changes for the NI limits as well. How many points there were on this one? No, there we go.
So national minimum wage and the national living wage. The national living wage is set to rise up to £9.50 per hour for employees aged 23 and over, representing a 6.6% increase. For anyone aged below 23, depending on what age bracket you fall into, there is still a wage increase, which is great. Some of the age brackets are actually higher than a 6.6% increase, which is quite a favourable increase compared to inflation at the minute. September was announced at 3.1%. So in real terms, employees will be getting a benefit. This is a reported roughly £1,000 a year better off for all employees, which is again quite a significant amount of money. However, because of the national insurance increases of 1.25%, because that has increased, the savings or the earnings that you are better off on the national minimum wage increasing offsets against the national insurance tax increase, which is effectively £700 better off every year. So again, the government has made some measures to help people on the living national minimum wage or the national living wage. So to relate this to personal trainers as well, if you're employed directly, this may directly benefit you if you're on the national living wage or national minimum wage. However, if you are self-employed but you work with a gym, you may be required to work 12-15 hours per week for the gym, in which case your hourly rate may increase in line with the national living wage. However, this being said, the gyms, I would imagine, are reviewing their own policies, because what tends to happen is gyms charge a rent which offset against the hourly wages that you get paid. So the gyms might decide to increase their rental expense, which allows you to perform your self-employment duties and perform personal training sessions within their gym. So it's worth having a conversation if this situation applies to you. It's definitely worth having a conversation with the gym that you work with to see what they're doing about these changes.
Following on then again, next point, the self-employed basis period reform. So basically, HMRC did a little survey a few months ago, and they basically asked all practices and tax professionals and accounting professionals to basically say, if we were to reform, what is the self-employed basis period? What is your feedback? And basically, a basis period is when you choose for your accounting, basically the ending date for your accounting period. So a usual accounting period is 12 months. If currently you had let's say October year end, you would, in the first year of trading, have 6 months chargeable up until the end of the tax year, and then the following tax year, you then have to charge 12 months plus the additional 6 months. So it would create an overlap charge. That's basically gets a little bit complicated, and we always do suggest to either get in touch with us or get in touch with another accountant if that is your situation, because it can get a little bit complex. But what this basis period reform is basically saying is ignore what the date says on your accounting date, and instead, from the 6th of April to the 5th of April, whatever you earn in that period is what's going to be taxed. This is very similar to what currently happens for property income. It basically comes into legislation from April 2023, which will be known as the transitional year, basically getting rid of all the overlap reliefs people may have for those that don't have a year end in line with the tax year, or coterminous, meaning 31st of March. And then from April 2024, when making tax digital now comes in, which will probably have multiple posts and videos about close to the time. Once that comes in, then it's just as straightforward. You'll be taxing your income per whatever month it is. So basically, no matter what the year end is, you're going to have April, May, June as your first quarter. and July, August, September, your second quarter, etc., etc. So it is something worth knowing for the future, but doesn't quite come in straight away. You've got a couple of tax years prior to this coming in. And last but not least, we have business rates.
Yes, so with business rates, through the pandemic, there were business rates relief for certain businesses, certain industries, etc. Rishi, thankfully, in order to help the economy recover, has put a freeze on the business rates, and you can still save relief up to 50%, was one of the main figures that Rishi wanted to announce within the budget. Now, for personal trainers, if you have your own gym facilities, then you may be able to benefit from these rates relief. Or alternatively, if you're thinking about creating your own gym facility, it could, when you're evaluating your capital investment and having enough cash flow to weather the first 12 months of trading, then considering that you have potentially a 50% rates relief could be really beneficial for you.
Cool. Yeah, some really useful information there. So obviously, majority of personal trainers are going to be affected in one way or the other by these changes. A lot of you obviously work for the big budget chains such as Pure Gym and the Gym Group, where they tend to be on an hours in lieu of rent setup. That's where obviously they charge you a rent and they then pay you sort of an hourly wage. So that's obviously going to be affected by the changes in the minimum wage. Those of you working for the big health clubs like David Lloyd, Virgin, Nuffield, you'll all be on a wage, so that's probably going to be affected. The ones maybe that won't will be those working for the sort of franchise chains like Energy, Anytime Fitness, where they tend to do just a sort of straight rent setup. So that may not be affected, but maybe a conversation to have with the managers or owners of those gyms. But yeah, really useful information. A bit of information about these guys. You may have seen from our socials and various sort of communications we've put out. We are working quite closely with Aiden and Adrian at Everyday Accountants. There's now a course that's been implemented into our PT courses that they've written to cover all the information you'll need as a fitness professional about the various accounting responsibilities you have. Then if you find that a bit daunting, they're offering discount on a great sort of range of services. There's 4 different options that they're offering to sort of do all the work for you effectively. So yeah, we'll provide a bit more information written below when we post this, but definitely worth checking out. And yeah, I'm sure they'll be happy to talk you through what they're offering if you do want more information.
Anything at all, really. We're here to help. It's not we're not here to basically scare you. We're here to help. So yeah, if you do see these videos and you think that's useful or you didn't quite understand something, get in touch. You've obviously got the landing page, which is creatept.everydayaccountants.co.uk, or you've got creatept@everydayaccountants.co.uk to get in touch. So yeah.
Brilliant. Great. Thanks for your time, guys.
No problem. Thank you very much.
Cheers.